I will cut this out. But remember, make sure you take notes. If this is your first live session, um, yeah, I am. There's a lot of DMs too I gotta get through. If you right, if this is your first live session, right, welcome. This is what we do in the Patreon 5+ times a week, right? Also, I want to talk about the Patreon a bit. This is the last week. Remember, on the 16th is the very last day. I need to edit that and say that the 16th is the very last day for this price point. After that, it'll just be this tier that is available, and this is your point or your opportunity to grandfather yourself in. You will not be affected by any price point whatsoever, ever. And what do we got? 500 members now? 509? It's been a crazy ride. It's been a fun one though. But if you enjoy this live session tonight, remember I do these every night in the Discord. This is the library of all of the live sessions with lessons, reviews, strategies, tool sets, everything that you need to kind of focus and prepare yourself in the market, right? Nothing that would stray you away. Really straight, simple, to the point. My kind of process on trading is rather simple, right? I'm not throwing out any kind of crazy indicators or anything like that. It's all very common things that you can use your advantage each day. So, right, my pre-market channel strat, psychological think tank group, 90/20 EMA strategy, going through, right? We've got a huge library here of all the lessons that we've done over the course of the time. So, let me go through here. We'll just exit out. So, going through today, I want to cover and talk about what happened today. Okay. I will DM you back, Q. I think I already did. You'd have to DM me KSOC, right? If you're already in the group, you should be fine. So, but going through here, right, today, I was, wanting everyone to be somewhat cautious. I want everyone to be cautious every single day, but Q brought this up in the Discord group today, noting the, okay, if it would allow me to zoom in here, okay, I guess not, noting the volume the last few days. Now, I also noted that this was a kind of a volume anomaly as well on the other pushes up. So, when we do shove down here, we can see the date 12/6. So lots of buying volume, but as we push up, that buying volume is not sustaining into the supply, right? The supply, we've been fighting over this 400, 401 area since November 5th. But every time that we approach this supply, it's decreasing volume. Okay, you see this very clearly here, decreasing volume on that rally, showing a weak kind of move. Same thing on this rally. Okay, rallying up into the supply. The buying momentum is not sustaining, right? You're getting buyer exhaustion near this. So same thing goes for today, right? Huge amount of buying pressure that had to come through to maintain this kind of trend, or try to at least, right? They do get wicked below, but it's a pretty strong push to the downside. But decreasing volume once again, or declining volume once again, something to really pay attention to when we are pushing up to this 400 area once more. Maplestax said, "Is the paid room worth it?" I don't know. You can ask other people. But going through here right today, I wanted everyone to kind of be aware of this supply zone that was there. Okay, and then zooming in on the 5-minute. Right, we were in that supply during pre-market. Now, remember, I'm always marking my pre-market high, pre-market low, previous day high, yada yada, right? Going through here, but these are significant levels, okay? But I'm not using just one strategy, time by time, okay? You have the 5-minute 200 EMA. This is a very strong indicator here, okay? I've showed, everyone in this in Discord. But I'm always looking at the 5-minute 200 EMA. Okay. I didn't mean to mute in the Discord. But going through, right, the 200 EMA on the 5-minute has been held. Okay, this has been held, and if it gets pushed below, it's used as resistance very clearly here. Okay, rejection, 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 rejection. Moving through, right, when we're consolidating, when you get consolidation, your indicators don't really do too much for you, right? We've seen that with the 200, or with the 9 and the 20, excuse me. But what price was this? This is that major supply zone once again, that 400, 401 area, right, where buyers and sellers are at a balance in the market, right? I enjoy day trading because you can catch the moves in between, whereas on the daily candles, right, you're just kind of consolidating, dojiing. But moving through here, right, on the rally, look at the 200 EMA on the rally, okay? Respect, respect, respect. Remember, I'd never look at indicators as a finite line. I'm always looking at them as an area, right? All these respects on the 200 EMA. So going through to today's current kind of move, I saw that, hey, we've been breaking and basing, making consecutive higher lows and higher highs in this uptrend. And if I look on the major trend, right, on the 1 hour, we're still maintaining these higher lows, but we haven't gotten a higher high. I guess in pre-market here, that was the higher high. So, intrinsically we would have gotten another higher low. But, if I clear this all out, look at the trend that's still at hand here. Okay, there's your higher low. There's another higher low and another one and another one. So a lot of people freak out if you're getting crumbled on the top side, right? But even on the top side, we're getting higher high, higher high, higher high, and now we're waiting for this next higher high. Now we may possibly gap up. Okay, that is obviously a possibility, but for this current trend here, we're maintaining all these higher lows. So going into today, how could you have prepared for this chop? Okay, we've seen this on the hourly, right? Gone through the pivot points. How could you have prepared for today and trading today's price action? Okay, now we had CPI numbers very early this morning, and that always kind of throws people off. For me, I'm not a huge fundamental kind of trader, right? I will always trade the price action that's in front of me, and that always prepares me to be able to trade anything in front of me. It doesn't matter if it's dumping hard or there's a Fed meeting or whatever, right? I can trust my abilities and my edge when I am going into the trading session each morning. For the members of the chat, right, we go through, here on my breakdown, I probably took 15 plus 20 plus trades almost, and we were majority green on, I'd say, 15 or more of them, and then a few tags here or there, right? And that is obviously going to happen in trading. No one's a perfect trader, and if they tell you that they are, right, it's probably not too honest. So just going through here, we see that, hey, we've gotten a major trend higher high before open. Remember, ripping into open typically isn't a good thing. Okay, but we have the pre-market high there and pre-market low. Those are two of my favorite kind of levels. If you are charting watch lists and everything, then that sometimes a lot of your levels are taken out just due to the fact that the pre-market will show you a gap up or gap down, or just give you very significant levels that you're not going to have when you're charting at night or the night prior or a week prior or whatever. So going through here, right, you can mark a very clear demand zone from this bottom wick here. You see this candle right there at 4 a.m. Large bottoming wick there. And then off of the open, I would have marked this kind of pull, this doji kind of pull down here on the 3 as a supply zone. Okay. So there, now you have two ranges. Now I know typically that for a strong kind of move to occur, I need to be able to see either this high break and base or this low break and base, right? If we go through the pre-market prep this morning, I chart this out every morning and out starting an hour before open, choosing contracts and situational contracts, right? But this is the same level, right? Pre-market high, pre-market low. I talk about which contracts we need to trade if it breaks above and bases, or if it just rejects in both instances. As well as watching the 200 EMA, right? We made a note here. If truly bullish, you will see the 200 EMA on the 5-minute being maintained, okay? So let's jump to the 5-minute after marking our zones. Going through here. And what happens there? You have the demand. You have the 200 EMA here. Okay, there is somewhat of a demand zone from here that I had marked earlier, right? Buyers absorb everything beneath it, really focusing on this major demand zone down here. But watching through it, I remember taking this trade. I traded AMD right off the open for a call scout, but we went long after we broke VWAP here and continued to stay long as we were riding our smaller time frame EMAs. I think I'm normally always looking at the 1 minute off the open. So we can see here the EMAs are holding here. Now I don't always weigh too much on the one. I do watch them quite often. But I talk about, right, holding on to this trade, even though that we got this higher high, it was a weak break for the high of the day, right? If you mark that, and I'll change the color here to like purple or something, right? That was a weak break of the high of the day. Only 3 green candles here that closed above, and the rest of them were, you know, lower high, lower high, lower high. Okay, so going through here, you know, let me clear this off again. When I get into a trend here, and we've already seen that it's been choppy, right? Pop up at open, push down, pop up, push down, right? And then pushing up once again. So by 9 o'clock or 9:30, or not 9:30, excuse me, 9:45, 10 o'clock, we should already have an understanding that, you know, price action is not following one trend, you know, to the upside or the downside, but really being able to, you know, focus on, you know, adapting to this chop until a true trend is developed. Okay. Now, when I talk about a true trend, I talk about like when the 9 crosses below or crosses above, and then you get consecutive, you know, respects on your EMAs on the way down or on the way up. So this right here, what's your EMAs doing for you? Nothing, right? They're in the middle. Down here, that gives you a good short perspective, but you know, you can't be too overly bearish on this because it is still rather early. We also went through today and talked about 10:30, right? Everyone should know that 10:30 a.m. Eastern Standard Time is typically a very strong pivot point throughout the day. So before I continue on this move here, I want you to just document, okay? I don't want to go to today's move. I want to go to a few days prior, maybe on the 5, and then we'll go 30 days. So not today's move, but yesterday's move. Okay, now 10 to 10:30, really 10 to 10:45, typically 10:30. It's a very strong point where we see a reversal or some sense of trend confirmation. So look down here, right? What time is that? 10:40. Okay, 10:40. What happens after that time frame? A large shove up. Day prior, what time is that? 10:50, 10:40, really right there. The base of it is 10:40, right after 10:30, right? Remember, it's a general area or time frame, but right when 10:30 hits, that's when, you know, those buyers, the larger participants in the market, when they begin to start trading after getting enough data presented to them. Remember, trading the open is like walking into traffic blindfolded, okay? Especially if you're inexperienced, it's literally designed for you to lose money. So going through here, we're going to continue. What time is that, right? 10:45, 10:50, right after 10:30, what happens? A very strong reversal. Okay, this is when larger participants in the market begin trading. So look at that as a wave. Let's look at today. Okay, let's go back on the one. Let's look at what happened today, right? So I was long on this. I went long here and here, and then I even bought a long up there on the pullback, hoping to hold the EMAs here. But I always understand the short perspective. That's something that if you guys have been following, you know, my charts for quite a while now, you'll see that you know, I've always talked about the short perspective and the long perspective, okay? Because there's a dialogue. We're not just trading amongst longs, right? There's a short and a long, right? So we have to be able to turn sellers into buyers, right? When sellers cover, they turn into buyers, and buyers turn into sellers when they close out. So I'm always marking channels because it shows, you know, the 2 phases. There's other phases, or there's probably 4 or 6 phases, whatever people go through. I keep everything simple, just so that everyone can have a clear understanding. But what happens here, right? Consolidation, trend, okay? Consolidation, trend, okay? Consolidation, trend, right? So there's two phases that I'm always looking for. Some people call it distribution, accumulation, consult, whatever, right? Just keep it simple. You don't have to go through a million names. But looking in this consolidation frame, right? So it's the high of the day and this low of the wick where we've based an entry off of. So I went through, what time is this? About 10:16. My alarm started going off. I always have an alarm set about 10:15 to 10:30 now. Right here. This is what I was talking about. So I said, where's it at? 10:17. High of day is risk for short. Okay, so I'm always talking about the short sentiment, the short perspective. The high of the day is the risk, right? We were buying calls in this area, aiming for these higher lows to be maintained. But as soon as I got this lower low where this candle closed, it showed a lot of weakness for me, and as well as getting a lower low, and getting lower highs. It's not a strong kind of trend that's beginning to be maintained here. So I see, hey, lower high, we pop up. This is a weak kind of reaction. I said buyers need to hold the 9-minute EMA on the 5, or the 9 EMA on the 5-minute, as well as right here, short perspective. I am interested in 388p at 1028. Okay, so 1028 is this candle right here. Okay, and I'm talking about the short perspective after, still I'm in my long position here. I'm still in my long position here. Waiting to see, hey, are buyers going to absorb this once again? And once I start to see, the 9 EMA crossing and we we shove this candle below, I instantly stop out. Why? Okay, if you guys have been following along, right, there's the doji method. And I think this was on the 5-minute, maybe the 10. I think it was on the 10. Yeah, the 10. Cisco in chat, right? One of our members in the chat pointed this out. Okay, this was the doji method. This is something that we've been teaching in the House of Stacks, right? I'm not sure if a lot of people look at it this way, but this is how I look at the trade. But remember, if you watch the video, I mark the highs and the lows, okay? And then I know that buyers and sellers are fighting over this. This is like a game of tug of war. So I always mark the body like that, showing a very desirable area that needs to be maintained for this balanced setup, right? A lot of people look at them at points of reversals, whatever, right? But dig deeper, understand the dialogue between bears and bulls in this kind of doji. So as soon as we got that candle closing below in the 10-minute, I was like, that's when I started talking about, hey, short perspective. Where is it at here? Short perspective. I'm interested in 388p. Stopped out for calls. Okay, let me go back to the 1. We see that the 10-minute doji closes below where buyers are, right, signifying a weak kind of bid being upheld. And look at the reaction afterwards. Okay, I'm going to show you another example from today, right, on the same chart. We use this multiple times today. I think there's 2 more instances today with the doji candle. But right here, right, I stop out. Where's it at? Stop out of calls. I'm in 388p. Do you guys see? Let me go to my Discord account so that you guys can see how quickly that happened. What are y'all doing? A hype train? What's going on? Yo, thank you. Thank you, Primrose, for those gifted subs. Thank you, Q, for subbing. Thanks, Ace. Thanks, XO Austin. I appreciate that. Love y'all. Hope you guys drink some water today. But going through here, where's that at? All right, right here. Oops. So we can see right here. Okay, I'm in 388p scalping right at 10:30. Right there at 10:30. That's the point where the market, they turn they flip the switch. Okay, the switch is flipped and they turn on the jets right to the downside. Okay, watch 9 EMA interaction as well as VWAP. See if sellers defend. I'm always talking about what sellers and buyers are doing, and you guys should be doing the same. Yo, Born Bougie, thanks for the bits. Thank you. How do I start trading as a teen? Study, paper trade. Stop. I don't know, man. I don't know what teenagers spend their money on, but just save money. If I could give you, a strong recommendation in life, no matter how much money you make, save more. Okay, save more than you spend. That's the best thing I can probably say to you from a young age. Start saving now. Um, but right, I flipped the sentiment very quickly here. Why? Because I know that, hey, for a short to come through here, shorts are not so, over pushing or overbearing the longs right there. What adds to this short momentum is when longs stop out. Remember, we talk about when buyers turn into sellers, and these buyers turn into sellers, allowing these shorts to confirm that push down. So as soon as I stop out right there, I instantly go into 388p, right, the puts. And when we are in a bearish trend here, what is the confirmation? 9 EMA crosses on the 1 to the downside, lower low and lower highs in this pivot trend. Now, what's our goal on the way down? Okay, you can aim for VWAP. Okay, that would have been another low kind of pivot right there. What happens? Can someone tell me, what happens right there on VWAP and the reaction to VWAP? Someone from the room? Rejects VWAP, okay. Breaking base, Primo's got it, okay. Or Primo's got it, right? So, it breaks VWAP there, okay, and it comes back and retests it right there. What is that? What does that mean? Okay, there is a buyer that possibly sits here, okay, and they break through him because they come, it comes right there. It comes through there. The shorts cover, right? Sellers turning into buyers. It pushes price up, and this is exactly where the longs stop out for break even, or as close to break even as they can. Okay, so you're taking away the stop out from longs. If you add to the selling momentum here, it's also a 9 EMA tap. Look at the confluence, right? Break below, push up. Remember, you want to short the upticks, okay? Sure, you could short the downticks like I did on a breakout, but when you're later down, like if you short, if you're taking a really late short, and then it pushes up in front of you, a lot of times those newer retail traders stop out right there. And where you stop out, that's an area where you really should be adding, right? I learned that from Bear. He talks it, he calls it like a gut cut feeling, right? So when you have that gut feeling as a newer trader, where you're like, oh man, I'm sweating, right? I'm about to stop out, right? That really is where you should be buying. Okay, and I'm going to get into talking about, trading off tempo and everything. But going through here on that trade, right, we were able to take this trade for over 100% all the way down and being able to ride that trend, right? Remember, I'm not only looking at the 1. The 1 is holding up here, but let's look at the 3. Okay, well, let me go back to the 1. And we see, right, someone would have been like, hey, but, how did you hold that all the way down? Wouldn't that have stopped you out? Let's highlight it. Wouldn't that have stopped you out over the 20 EMA? Look at the 3. I'm always looking at the 3. The 3 was a perfect 9 EMA tap. Okay? 200 EMA rejection there. Break and base on the 200 EMA on the 3 minute. This is how you hold on to your winners. Don't get stuck into one time frame. Look at multiple levels of confluence on different time frames. And trust your entry, right? Value your entry. How many people wish they short up there? In hindsight, you're like, oh man, that low support break, that lower low, that was a money add, right? So in your review, if you understand that, when you're live into a trade, like, hey, that was a super strong entry. Why are you selling for pennies? Why are you selling for, minimal kind of gains there, right? And getting all out. What I like to do, right, when I'm adapting to a range kind of trade or something like that, you have to really be able to, sell little pieces, right? Scaling out. So let's say, I took my entry here. Okay. Took my entry there. Yo, thank you, Q, for that gift. Oh, we got a cat. Hell yeah, we got a cat. Noah Games, thanks for that gifted sub, bro. Oh my god, you stop, bro. So we take we buy our put here, okay? We buy our put instantly on the low break. Going through here, we get a push down, right? Well, now when you have a very strong trade, always look, hey, where's that short gonna come in, right? Because you took an entry here, but someone else missed that entry. They're sitting there drooling, waiting to get in. So if you push down here on the 3 minute, boom, pushes up, you know that that short's going to try at least, right? That's the biggest thing, is about trying to short, okay, or trying to go long. You have to accept that, hey, this entry may be wrong, and if it is, I'm going to cut it. There's no reason to be holding on to losers when the whole kind of point of trading is to cut winners or cut losers quickly and hold on to winners, right? Use your capital to the best of your ability. Yo, Avon99, thanks for that sub. I'm using Thinkorswim. So, when we come up, right, remember talking about shorting upticks. So this pushes up, that's a short, okay? This pushes up, almost touches the 9 on the 3, that's a short. This pushes up again, boom, it's a short. No one should be shorting, oh, I want to take a late entry. Oh, I see a big red candle, I'm going to buy the put. I see another big red candle, I'm going to buy the put, right? That's wrong. What happens when you do that? It pushes up on you. It pushes up on you. Oh, I want to go long. I want to buy the put down there, right? What happens? You get taken for a little ride, okay? So you don't want to do that. Remember, if you're trading options, especially, cheaper contracts on the pullbacks, that's your friend, as well as low risk. Where's your risk if you buy a short right there? If you buy a put right there, right? Yo, thanks P2 Andy for the sub. Right, where's your risk? Is your risk way up here? Right? Sure, it doesn't stop you out, but damn, that's a lot of risk to go through. Right? Compared to if you buy right there, near this area, right, this upper wick. Okay, whatever, it doesn't have to be perfect. Your stop out typically on a 9 EMA tap is a 20 EMA. So you have a lot more room. So your stop out is now around this area if it breaks out, maybe a little bit lower, okay, compared to, that low wick. So you have a lot more room to hold and still not being down more than 10% typically. Yeah, appreciate you guys. So that's what we're talking about, going short on the upticks, okay? And then when you want to go long, okay, what's the best entries? How many people today got stopped out when they were buying the VWAP break? Okay, how many people have stopped out right there? You don't have to say it in chat, right? But, sit there and kind of be like, damn, dude, I did that, right? Why did you get stopped out? Because you bought the uptick, okay? Even if you bought down here, look, compared to someone who bought down here, okay, where you should have been buying, right? Buying the downtick, you probably wouldn't have stopped out right there. You would have seen that, hey, there's a 3-minute 200 EMA, lots of buyers absorbing right there. They're using this kind of hidden demand zone right there to enter into the trade. But if you bought up here anticipating a breakout, that is lazy trading. Okay, so going through when you're buying the breakout, you're adding to the liquidity of these buyers. So the buyers who bought right there, when it pops up to VWAP, that's a target for them. They're selling their contracts, and those weaker kind of more novice retail traders are the liquidity. You're buying that contract at a much more expensive price than what they bought them, compared to when it shoves down, the contracts are cheaper. Okay, imagine if you buy here, you buy when it shoves down, you want to absorb that. Ace, I know Ace took this for a long earlier, right? Got the perfect bottom tick off of that and sold them for over 100% all the way up here. Okay, that is, that's the basis of trading, being able to lock in profit quickly and buy low risk kind of setups where the premiums on the contracts are not primed up. Okay, same thing, right? How many people FOMO'd into these big green candles? Okay, what happened thereafter? Okay, they bled to death. So, a lot of times the problems are right there in front of you, and if you consecutively, going through these problems and experiencing these problems, it's so simple, right? Go through your review. I tell members in the Patreon every night, right? Go through your review and mark your entries and exits. Okay, clear the chart out, completely cleared out. Okay, let's say that you went long right here. Okay, why would you go long just randomly out of nowhere? Okay, maybe you have a support to base risk off of, sure, low risk right there. But if you didn't respect your stop loss, right, then you got drug out. Okay, they dragged you. But if you notice that, hey, this lower low broke, okay, that's a short setup. The 1 minute 9 or the 3 minute 9 and 20 EMAs cross, as well as the one, and we break below VWAP. taking into account all of the confirmations for a bearish trend here, you would have focused your energy on adding into the short. That was the higher likelihood and more, higher probability of a play that was going to occur. So going through here, right, I have a few notes, right? How to trade the chop, right? Adaptation to market environment. We've talked about that, right? Also looking at the average kind of range. Now, for those of you who have been in the Discord, right, what is the average range that the Qs typically like to move? Now, this is on average, okay? Anything above average, of course, is different. But, normally what, kind of range do the Qs like to move within? Yeah, 1.5% about, right? Sometimes 2. I would say typically, a strong consistency would be 1 to 1.5%. Now, I'm not saying the overall trend, but I'm saying its legs. Okay, it's rallies that it likes to have. So we can see here from this kind of push. Okay, right there, that's 0.6%, 0.66. Okay, so then this push right there, that's 0.8, so very close to 1. Right there, 1030, this push right there, that's 1.34. That's within that range. Okay, right, going through here from this tip, or from this base to the tip right there, that's 0.98%. That's 1%. Okay, so take that into account when you're getting into a trade. If you're buying very late into these extended moves, okay, you have to really understand, the meat of the move has been taken. All that's left are scraps, and later entries dictate quicker profit taking and tighter risk management. Okay, no one should be getting a large position size up here, hoping for a high of day, kind of interaction. Sure, you can hope, but that's not really going to do much for you when it's time to execute your stop loss, right? That hope is really going to make you hold on to that losing trade. So going through, right, I continue to talk about respecting sentiment shifts. Okay, so I know that off of a very strong downtrend here, it's hard to flip going long, especially, right, I was going long up here, and it was very seamlessly, I was very seamlessly able to flip to the short. But, respecting that kind of sentiment shift and understanding that, hey, that can happen at any time. It doesn't matter if the trend is, consecutively stacked higher highs and higher lows, right? It can completely flip to a bearish trend within an instant. I think a lot of people got tossed up here today when, we had seemingly a very bullish trend on the higher highs and higher lows. And as soon as we got this candle that pushed down, right, it wasn't, it didn't take out this low on this one candle, but it was a bearish engulfing. Okay, and this was a very kind of, strong candle that happened, not so long ago on this move. And the second time that we got it, what did it do? It maintained, or the first time it got it, it maintained its support there. Okay, but the second time that we get it, right, you need to mark the low of that, and it fails that low. Okay, it pops up, gets a lower high, and then puts in a lower low. So you could have just looked at your EMAs, whatever, right? But I'm really a price action trader at the end of the day. So I want to go through and look at this, right? Higher high, right? There's your higher low, another higher low, higher high. They're not going to be perfect. Higher high, okay? Higher low, but then you get a lower high, okay? And on the very first lower high, you get a lower low, okay? You get this lower low, okay? And then on the next candle, lower high. Okay, then we see another lower low being broken. Okay, and then another lower high. Okay, what does that tell you? That the sentiment's not going to shift until you get a higher high, right? Or until you get consecutive higher lows. So, just always keep that in mind, right? Don't be so oblivious to the chart. I know that sometimes on the smaller time frame, it's a lot of data to take in. But we really need to be able to understand that, hey, the sentiment shifts or the current trend is so evidently right there in front of us. All we have to do is mark our pivot points day in, day out, and understand that, hey, this level truly needs to break up. And if it gets close to this level, it would be a strong short. So, what happened here? This was close to that high, so someone shorted it right there. This was close to that high, or just using that area as risk. Another short. This previous lower high, right? They short right there again. Okay, this one right there. I'm going to mark all these little small body dojis, right? They use that same area to short once again. Okay, and they go through doji candle here, right? They use this doji right there to base risk off of. We see that this horizontal support is not having as much momentum, not strong lower lows, right? There's also a downtrend break, whatever, right? But just paying attention to the trend that's at hand. Stop trading. If you go through in your review and you find yourself, hey, I'm all my buys were right here, right? That's awful. You know, that's not how you want to trade. You want to trade less quantity of trades and more quality of trades. So, you know, just kind of think about that. You know, reflect upon your trading session today. And if you went through a lot of just, you know, random trades, just throwing things out and seeing if they're going to stick, you know, that's only going to last you for so long. So, I also have right here, you know, how I adapt to trading kind of choppy kind of trend days. So, for example, right, I take this entry here. I think I have the trade written out. Where's it at? Right here, 388p. This is where we take 388p for $1. Okay, they're $1 contract. As soon as it shoves down, I scale a big chunk out at $1.33. Okay, then it shoves down again. It goes down to 1.8. Right, every time I get a lower low on heavy momentum, I'm scaling out. Right, I'm joining the ask, but I'm holding a small core. So on this first big push, I may scale half. On the next push, I may scale a quarter. On the next push, I'll scale an eighth, right? Half of that quarter that's remaining. And then I'll leave the rest to ride on an EMA or the pivot points succession, right? So, you know, there's a lower low, or a lower high, right? That's my next stop. As soon as it pushes through, I'm out, right? You should have been, you know, obviously scaling like I talked about on lower lows. So lower low break, scale, lower low break, scale, lower low break, scale, right? That's how we should be trading, moving the stop up along the way. Too many times I see traders having prime entries, right? Taking a prime entry like something like this and holding it all the way up here, right? That's crazy. You know, that is going to drive you mad, right? And that's greed. Not being able to sell, you know, for a large sum of money and then selling for pennies up there, or even, you know, stopping out break even or red on the trade. I mean, it's foolish, right? That's greed within itself. Remember, what are the main things that hold traders back? It's greed, fear, anxiety, anger, right? The list goes on. You know, and then continuing on the notes today, right? I want to talk about, you know, how to take base hits. And I've really already gone over it, right? But aggressively selling, you know, if you're in a downtrend and you get a lower low, right? That's like getting a higher high in an uptrend. But a lower low, you should be scaling, right? In an uptrend, if you get higher highs, right? Look, let's say you take an entry there. Okay, there's the high right here. You break it. You don't scale right on it. You want to get some sense of momentum, right? But you scale right there. There's your next high. Okay, pulls back, pushes up. You want to scale again. It doesn't matter if you scale right there and then you see the trade ran up another couple points. If you're a new trader, your job is not to get the top and the bottom of the trade. Your goal is always to get the meat of the move, and being able to know and understand that it's okay if it runs ahead of you and you only get, you know, a 10 or 20% move, and it could have been a 10 million% move. Who cares, right? There's going to be so many more opportunities. How many times do you guys see a day of people posting crazy gains on Twitter, right? So it's out there. Anyone can take a 20 or 30 cent contract and sell it for 200-300% at the end of the day. Okay, so it's not that special. So if you understand that the opportunity is there and presented to you every single day, then stop freaking out about selling too early, this or that, right? You're not at that point in your journey where, you know, you're going to be able to hold on for a lot longer and trust your entry. As long as you're taking good trades, right, buying, going long on down ticks and going short on up ticks, right, then you're going to be able to, you know, put yourself, you know, that's the first step, getting low risk entries near a level where the price of the premiums is, you know, has pulled back and not as priced in like a rally up or shove down. You know, and Shifton says, right, I only trade one contract, right? You're not worried about scaling in and scaling out. You're worried about taking proper entries and exits, right? So your goal, if you're trading one contract, is to walk away from the trade with a strong entry and walking away profitable due to the fact that you had a strong entry. And even if you do get a strong entry and you stop out, it should be a controlled risk, right? You should be minimizing your risk as much as possible. It's very, very evident, or not evident, it's very, very possible to walk away from the market with a max of 15% stop loss or so on an options contract, right? A lot of people hold theirs for 30, 40%. I don't recommend that. But being able to practice, going long on a downtick, right? Like this, that's your low day risk, right? So when it shoves down again, you buy. Okay, when you buy, if it does want to push down below, then you just stop out, right? It's a 15% loss, maybe a 20 depending on what size contract you bought, right? But if you're right, then it's going to be able to hold through. Just due to the fact that you never get stopped out, and you should move your stop up along the way with your pivots. So going through here, I talk about aggressively selling on the lower highs and lower lows and higher highs in a trend. Okay. As well as not caring if it rips after you sell. Okay, we've talked about that. Accepting the fact that that will happen and it will continuously happen. I've been trading for a few years now, and it happens still, right? Do I care when that happens? No, right? I think my last scale out on this 388 was 2.65, and then they ran to 3.3. So, I left $65 a contract on the table. I don't care. You know what I mean? I really don't, because there's so many more trades that we took throughout the rest of the day that I understood that there was more opportunity, and it's all out there for me to grab. If I'm not catching up on the chat, I'm sorry. I'm trying to just keep the pace going. But let's see. Yeah, I mean, I'm always looking at consolidations, but it's not as black and white as that, because this, right, shoves down, consolidates, trends, consolidates, but what happens here, right, you get a channel, it does break below, okay, and then someone would have hammered the short, and then they would have got taken for a ride if they didn't practice a strong stop loss. So remember, always look at your context. You can't just trade one strategy or one tool and use that for everything. Okay, you must be able to also look at kind of other outlying things like pivot points, right? That low of that 5-minute candle or 3-minute candle there, that's where long space risk off of it. And if it was going to fail, then it would have seen a different kind of outcome. So as well as, let's see what's here on my notes. Okay, average daily range, we've gone long, downtick, short, uptick, pivot points. Scaling out. So we've talked about EMAs. Okay, so I really want to use this as an example, because this is when my edge is present. Going through when an EMA is being respected. So let me go here on the 1. I'm typically looking at the 1. Okay, but a lot of times when people get a short, that I get this problem a lot when people ask me, right? So let's say we take the same short. Now you're pushing down, making money. Remember, we talked about wanting to sell on lower lows or just scaling out in general. But what a lot of people do is when they sell on an uptick, right? This is where they first scale out. Okay, when it pushes up, and you're supposed to short that. You're not supposed to sell your put. But really what that is you're putting yourself at a disadvantage, okay? Because 1, you're going to lose money on your premium, okay? 2, you're not looking at the overall kind of perspective that's being put out onto the chart, right? Remember, we talk about normally where people stop out is a prime entry for the more experienced traders. So when it pushes down, you don't want to short the downtick, but you want to short the uptick. So when you scale out on an uptick, you're just doing yourself a disservice. Now, when the correct way to scale out using an EMA is when, let's say you grab this entry right there, okay, and then you start to see a space in between price action, the candlestick, and your EMA, right? This is where you should be scaling out when you're far away. Remember, this candle hadn't been developed yet. So imagine, 1, 2, 3 candles. It keeps pushing further away from the 9 EMA. This is where you should be scaling, right? Right there on the low of that candle around this area, the further it extends. So let's say that someone comes in and they short the next uptick. Okay. When it extends far away, lock some profit in, okay? That's when longs start to absorb, or, obviously these sellers have to turn into buyers, so it's going to pull back. Okay, so just keep that in mind when you're scaling out. Look for this extension off of the 90 MA to get a strong scale out. Remember, it doesn't matter if it continues 10 points in your favorite direction after you sell. As long as you walk away and execute your plan appropriately. We've talked about off-tempo trading, right? Buying longs in the incorrect area, right? When you buy long up here, even if you're scalping, right, on this downtrend, right? But if you buy a long because you see these big green candles, how many of you went through that today? You're setting yourself up for failure always. So, and then what is that going to end up doing to you when you get off tempo, right? You're gonna go short down here, right? Then you're gonna stop out up here. Then you're gonna go long because you see these big green candles. Then it's gonna stop you out because you go in a down tick. Then you're gonna short because you're like, damn it, I can't get a hold of the trend. Then when you short, it rips in front of your face. Then you stop out and then you go long again because you see these big green candles, right? You see this kind of, cyclical kind of moment of revenge trading that happens and what people experience. That's getting off tempo. So what happened here, as well as, right, emotional control. It's a huge kind of factor when it comes to trading. A lot of people don't really respect the psychological kind of ordeal or experience that comes along with trading. Many of you have seen this, but like trading is going to really reveal who you are as a person, right? If you can sit there and ask yourself who you are as a person, you're probably going to lie to yourself. You're probably going to say, hey, I'm good looking, or hey, I'm charming, or hey, I'm confident, whatever, right? You're going to lie to yourself because of your pride. What trading is going to do, right, it's really going to show you, your faults and your emotional problems that you go through day in, day out. So, what is going on here? Oh my God. When you're going through this, right, you're going to experience kind of, revelations or, realizations of yourself, right? I knew that I was an angry person, but I didn't understand to what extent of how much of an angry person I would be, right? So my anger really led me to FOMO entries, right? Being frustrated with the chart, revenge trading, right? Turning small losses into very big losses because of being stubborn. And some of you may go through, being fearful or anxious traders. And when you're a fearful or anxious trader, you're going to miss out on opportunities, right? How many of you, I've said this a million times, but new traders generally have a strong idea of what is a good entry and what's not. But what inhibits them from taking those entries is fear and anxiety. Okay, and that's that hesitation that is going to continue to develop and fester to where you're just going to have paralysis analysis every day and just watch price action unravel in front of you. So going through trading, right, it's turned me into a very confident person, someone that is very I know who I am in and out, as well as my intentions of trading when I go into the market every day. I know that we will go through uncertainty, right? I wake up every morning and I know that, hey, I have a group of 500 plus people, and we're all looking to make money. Everyone that comes to the market's looking to make money, right? But I need to be able to prepare myself and them in order to go through the day with the strongest amount of sentiment and understanding of the market as possible. Okay, so if when I go through, and yes, there is that uncertainty, I trust my edge. I trust the process that I've worked so hard for, and then I'm trying to portray to these newer members, right? So right off the open, I what did we do on AMD? I mean, it was fun, but it was risky, right? For newer members. Right here off the open, where's it at today? I mean, dude, I was like, hey, be patient, be patient, be patient, right? But I trade the open every day, so if you're new, don't follow me. But right here, 9:30 a.m. Scalping 140 calls AMD. We talked about it. If you want to watch how I traded the open today, I think on YouTube the live stream from today's session is up there, and you'll see exactly how we traded the open and how I was able to, I think I was like 4 for 4 or 5 for 5 until like 11 o'clock or something like that. I don't know. But going through here, right, scalping 140 calls on AMD. Why was I able to scalp that, right? What did I say? VWAP is risk for long currently, okay? May see buyers absorb below. So, it pushed below and buyers absorbed it, okay? All I did off of the open, remember, let me just clear this all out. Remember, you got this level prior to open, these 2 candles there. All I did was like, hey, buyers may want to respect that. I'm going to instantly buy a call right off the open. And if this stops me out, it stops me out. It's a tight risk. I'm going to try it, right? No fear, straight confidence. Whatever's going to happen is going to happen. I accept the possibility or the probability of the trade. How old am I? I'm 24. Yeah, but yeah, I am an old soul. I would say so. I've been through a lot of shit. But, going through it, right, taking that call right off the open today, 9:30, 140, okay, it's a good general rule of thumb. Right off the open, we should be taking scalps. I don't care if this rips forever. There's days where it just chooses a trend. Why is it so volatile here? Because what does everyone have when they go into the market every morning? Okay, you have people who are bearish, you have people who are bullish. So you're going to have chop. You're going to have 2 indecisive sides pushing back and forth, right? You go long here, push up. You're going to have someone who's going to short that because it's over the pre-market high, okay? What do I do again? Scalping 140 calls again, 9:35, okay? Stop near low of the day, 9:35. Where's 9:35? Literally right here, this candle. This red candle, my stop was the low of the day. Remember, I never look at stops or support levels as a finite level. It's always an area, okay? If you get wicked out, you're just going to have to learn through experience or understand the 84% rule, okay? So we take another AMD call right there. Boom. This was like the same price. I think they were like, what was it? How much was it today? 140 calls were 213 the first time. I took them to 245. Second time I took them from 202 and they went all the way up to 2.4, right? I got my scale out at 221 and 2.4. So 20% moves in less than 5 minutes, right? I was, it took a lot of kind of, high process thinking there, but, what did I do? I went long on the downtick. What did a seller do? They went short on the uptick. What did I do again? I went long on the downtick when it shoves down. It gives me an area to base risk off of. And what did the shorts do again? When it shoved up, they sold again, okay? It's just think about that. That is probably the best thing you're going to hear all year because it changes a lot of people's mindsets on the market, and it's very simplistic. The 84% rule is this. So let's say that this is a good example. You have that support on AMD from the morning. Let's say that you just blindly buy right there. You buy a call, okay? Because you want to base that out of support. And you get stopped out down here. Okay, that would have been normal, low day. You would have stopped out, some candles closing, whatever. You stop out. And when it comes back to your entry, okay, you should enter that. And, 84% of the time, as the name implies, it will work out for you. What is it going to do? It's going to erase your loss, and your thesis is proven correct, right? The reason why this works is because possibly 2 things. You either had a poor entry or you had a poor execution of that entry, right? Not leaving some room to add down or something like that, not giving enough wiggle room, too tight of a stop, whatever. But your thesis was correct. So you buying along here in anticipation of it going up was right, because that's what happened. When it shoves up, you buy that same entry, you negate your losses up here, and it brings you to a very strong move up. Even right there, right? Look at where this level all day was supported, right there. Buyers came in, stepped there, and they stepped in there again, right? Your thesis was right. You identified where those larger participant buyers were, but maybe your execution was poor. Okay, that's the 84% rule. Um, let's see. I talk about limiting trades with the emotional control, right? Being able to, as a new trader, your job is to not make money. Okay, the money will follow if you develop a strong process. Now, depending upon how long it takes for you to develop that process, is it's just through screen time. Everyone has different circumstances or different learning curves. Um, you just really have to be able to go in day out and identify low risk setups, something that you feel like a larger participant in the market would be trading, and try to trade alongside them. Okay, look at this short up here, right? You could have marked this upper wick, kind of this general area as a supply zone. It gets just off the open, rejection there, rejection. You could have shorted this whole area all day, all day off of the open right before 10:30. Okay, and you would have made a huge kind of gain, right? And that's just all a supply zone is where a larger participant in the market is sitting. All a demand zone is where a larger participant in the market is sitting. Okay, that's all it is, guys. So, um, Maple Black says, can we go over the best long entries? Now, that's fine to go over long entries. I am not a biased trader. I will trade both sides. But if you want to talk about, the best long entries, right? We talked about going on down ticks. You had this 138.50 area as support. Remember, all of these buys were strong entries here. All we're doing is trading in a range, right? There's this kind of general area, this kind of general area for demand, right? It does dip below the demand a little bit, but that bottoming wick here off the intraday zone, respected, 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 respected. Those are your best entries, okay? One of my favorite types of trades are zone to zone, right? Whether it's demand to supply or supply to demand. They provide very clear risk, right? The short stop loss being the high of that zone and the long stop loss in a general area. Maybe you have the low of that zone or a little bit of wiggle room, right, for both sides. But generally, right, that's a good kind of measure for strong long entries and strong short entries. How long did it take you to get profitable and consistent from when you began? About a year. About a year. So, but everyone's different. That question, everyone says, and you may take 2 years, you may take 3 years. It really doesn't matter as long as you focus on your process. Never compare yourself to anyone else's journey, right? Everyone's circumstances are different, and everyone learns at a different pace. Do I flatten immediately if it hits your stop loss? I've been having trouble exiting a trade after my stop loss gets hit because I don't get filled in the bid ask. My only concern is with flattening is the slippage. If I need to get out of a trade, I just need to get out of a trade, right? Because what if you stop out or you want to sell the bid? Okay, let's say, oh, I want to stop out and sell the bid there. You don't get filled. I want to stop out and sell the bid again on momentum. You don't get filled, right? You're just getting into a headache and having trouble stopping out. Where if you just flatten, okay, let's just say I flatten right there. Maybe I get filled down there. That's much better than kind of fighting through getting filled for a stop out. So, and the spreads are really not too bad typically, right? On QQQ or AMD, the spreads really aren't too bad or anything to complain about. I'm feeling I'm on the verge of greatness, just something I can't explain, but close to finally getting it to click, and it really is simple at the end of the day. We are difficult. Yep. My trading, style is very simplistic. The 9 and the 20 EMA, you guys have heard of it from somewhere, right? It's not something I made up, obviously. It's just another strategy that people trade alongside. It's perspective to base trades off of because larger participants in the market trade it. Also looking, I trade VWAP, the 200 EMA. Those are all my indicators. I use supply, demand, support, and resistance, right? Yada, yada. Let's see. But, right, I really want to talk about this as well, right? As humans, we typically have an addictive personality, right? If we talk about addicts, whether it's drugs or gambling or whatever, right? When they are doing that, they're not thinking correctly, right? My father has had a gambling problem prior, and I really hate gambling. It's something that I feel like has influenced my trading, but I hate gambling. I'm not against it. I just don't like doing it. But what happens is it was when you're not able to, it's like a stubborn gambler, right? They're not able to admit defeat or admit that they're wrong. Maybe they have, they've lost their chips at the table and they've got another $1,000 in their pocket. Okay, I talk about this. If you're not a skilled trader or an experienced trader or someone who can't respect a stop loss and you have a large account, you're gonna end up revenge trading, right? Because why? You're like, damn, I lost $500, but I got a 50K account, right? I've got more money than this, right? I'm smarter than that, right? So I'm gonna go back and I'm gonna trade poorly again. I'm gonna keep trading poorly. I'm gonna trade on tilt. I'm gonna trade based off emotions, okay? And when you do that, that $500 loss turns into a $1,500 loss, a $2,000 loss, right? Because you're trying to prove yourself to the market, where the market is a inanimate entity, right? It's just a vessel of exchanging money, right? So don't try to prove something wrong or get so emotionally attached into a trade or where it's going to create bias and tilt and blindness, right? If you're new and you've got a large account, you need to withdraw, right? I've talked to a lot of people. Hey, I have a 25K account. Is that enough to trade options? You don't even need a PDT, or you don't even need a margin account. You just need a cash account. And if you're learning options, you really only need to start trading with like $1,000 or less. Less is more, less is better, right? You're gonna learn proper risk management, and you're gonna be forced to trade a contract at a time. I don't look at level 2 in tape. No, I don't. I have no use for it. Um, Maple, do you think your history in small caps being so fast paced on the 1 minute is why your edge is so present in large caps? You are very advanced in reading the 1 minute. It makes things look so obvious in hindsight. I use all time frames. I really didn't use the 1 minute in small caps until I started streaming back in May. And that was only to really help newer traders understand how to use the 1 minute. Now I use it every freaking day, and I really don't like trading without it, right? Because there's a lot of data there, and I'm not influenced by that data so much because I have had the experience of trading every single day, hours upon hours a day, reviews, chart reviews, everything, right? That I put in a ton of screen time, and I feel like that is your best kind of tool when you want to progress. But I'm always flipping through charts, right? This isn't how I trade. You guys know I have multiple time frames up while I'm trading, multiple tickers up. I have 3 screens where I have multiple other charts up, right? I'm always looking at different time frames and other perspectives. But my favorite, is the 1, the 3 minute, the 5 minute, and the 10, right? And I like the 15 and the 30, but these right there are what I use the most. Uncle Cletus says, for 24, you got it down. 35, I'm trying to get your mental state. Yeah, man. It's super simplistic, guys. I'll never say trading is easy, but trading can be simple. And if you've been in the group, right, it's been pretty simple, I feel like, for a lot of traders now. They also know, if you're a newer trader, you know what your problem is, but you may not understand why that problem occurs. So when you're going through review, don't just study charts, right? Study yourself. Think about your emotions. I keep a journal, a notebook right at my desk, right next to my keyboard, and I write down notes of what I'm experiencing throughout the day. I have a very clear understanding of my emotions, and you should too, especially if you're dealing with money every single day. Yeah, what's up, Lunar? No, there. So, if let's say you have a $500 account, okay, you trade all that $500. Let's say you make $100 profit, okay, so you have $600 waiting to be settled. Tomorrow morning, you will have that $600 settled into your account, ready to trade options contracts again. Now, just be aware of holidays and stuff. I know that we have a holiday on Monday, so anything you trade on Friday is not going to settle on Tuesday. It's going to settle on Wednesday. So keep that in mind when you are trading Friday if you have a cash account. How do you handle a wide ask and big spreads? Do you just buy the market to make the entry? I'm normally buying the ask. The spreads on QQQ are really not that large, especially on AMD. This is probably not going to show very well here, but right, this is a $15 spread, right? $15 spread. It's really not too big of a deal. Normally when I go through on AMD, it's a $10 or less spread. This is just after hours now. Yep. What is your thoughts on position sizing for smaller accounts? Like 1 or 2 contracts if you're really new. How much do I usually spend per contract? I like trading contracts from anywhere from 30 cents all the way up to like $3 or $4. Nvidia, I'll trade the $500 or $600 contracts, but I know Nvidia typically is a strong trender, so I'll go further out of the money and collect some delta along the way. Let me see here. But yeah, guys, I mean, you guys really just it's all right there in front of you. Every single answer that you need when it comes to the market is through screen time. If you're a trader, I'm gonna say it again. If you're a trader losing all of your buying power within the first 30 minutes to an hour, would you not look back in hindsight and say that that's what the market is designed to do? Right? Is that not what it's designed? It's not. Is it not designed to take money from the impatient and bring it to the patient? Or is it not a vessel to be transferred to do so? Just like that Warren Buffett quote, right? Look at the first 30 minutes to an hour. Chop. If you're a new trader, you don't know how to trade that. Okay, day prior. Okay, look at this. Chop. Think of all the people who went long and stayed with that long kind of perspective, right? They got chopped up and then it trends, right? What time does it trend? Right about, is that right? Dang, that's only 9 minutes off the open. It's crazy. Let's see here. Chop at the open, right? Just avoid trading the chop. If you're out of buying power the first 30 minutes, you're losing a lot of opportunity presented to you the rest of the day. Okay, remember, right here, you only really have to wait for around that 10 to 10:45, 10:30 area, and that's when the trend really develops on majority of these tickers. So yeah, but I think that's gonna wrap it up for me, right? If you enjoyed this session, remember, please check out the Patreon page. It's the last week. I've been doing kind of giveaways for 1 week memberships for people who've been wanting to check it out and stuff. There's only a select few winners. I think I have 3 left to choose from on Twitter, but if you want to check it out and lock in the rate, this is going to be your last chance. I extended it after Christmas just because I got a lot of messages of people saying, hey, I had a budget for Christmas, this or that. The 16th, this upcoming Sunday, that's the very last day. I will close this tier out, and everyone in that tier will be able to maintain their membership and never be affected by any kind of price increases thereafter. So, as well as right in the Discord, you get access to right all of the kind of strategies. I have a lot of files here, educational files, as well as my recorded live sessions, something just like this. I think we have over 80 plus now. As well as an organized kind of column here with inside bar plays, options, crypto NFTs, right? We have a small account challenge going on, as well as I go through, if you want to discuss charts and review other people's charts, right? Questions channel, psychological training. We go through, I do every weekend homework. Last weekend's homework, I wanted everyone to go through and post one chart from in the homework channel of a ticker from Friday and label all of the possible entries you could have taken on quality setups. Right, each weekend I have one of these just to keep you guys tested and on your toes, right? Because I know the weekend a lot of people take time off or they're just not thinking about the market. But if you have time, this really is going to be able to test you and keep you kind of grounded when it comes to trading, right? I'm a huge kind of person about not missing days in the market or being able to stay fluid or stay kind of limber with my kind of trading kind of analysis and everything. So these activities each weekend, I really want you guys to be able to go through and participate in, right? We got a lot of traders who went through and found a lot of things that they found consistent that were buys and sells, right? So it's only going to push you to be better, as well as, you know, we go through. This is the main kind of chat where a lot of people talk, as well as, you know, the trading floor with all of my call outs throughout the day. These are all time stamped for you to go back and review, as well as the Maples watch list channel, right? I start about 1 hour before open, and we go through, look at contracts, look at tickers, go over the overall sentiment of the market, and you know, really going through picking what contracts and understanding what the indexes are doing, right? So like you know, let's say you know, going through the indexes like VIX and NASDAQ and everything, and just going through. So the polls have been pretty good. We've seen a great improvement in the polls, right? 60 to 70% plus is what I really want to see. Of course, newer traders that are learning will go through and have red days, and that's just completely natural. But a lot of times those members are minimizing the risk and doing a very good job at understanding why they did something wrong. So let me make sure that I'm not missing anything as well. But yeah, is there a Patreon video stream? Yes, every week. So every day I live day trade in the Discord. I stay on stream with you guys for, you know, an hour before open until about 12 to 2 o'clock, right? So I'm on there for about 4 to 6 hours every single day, walking through trades, providing commentary, letting you understand what is a good entry and what is a poor entry. Also, we do live sessions like this. I've done one every night this week. Sunday, Monday, Tuesday, now Wednesday. So 4 already this week. Last week I did one Sunday, Monday, Tuesday, Wednesday, Thursday. And Friday I was out for the weekend. But I also do videos kind of going over strategies. My most recent one in the live session channel was, you know, how to trade options contracts, or my process of trading an option contract on Thinkorswim. So if you're having trouble kind of understanding my process, you're going to be able to, you know, understand through the provided strategies. And I think most of those strategy videos are like 20 minutes or less or something like that. The rest of them are all an hour. So but yes, you know, if you enjoyed tonight's session, I know there's a lot of members from the Patreon in here, right? But if you're not, right, please check out the Patreon page. If you have any questions, please let me know. For everyone in the Discord, right, I will see you all in the morning for the live stream. Remember, same thing, about an hour before open. We'll go through, pick contracts. My kind of, you know, thesis going into tomorrow on the Qs, I want to look at the hourly. Now, we may gap up, may gap down, so it doesn't really matter. The main thing that needs to be held here, okay, is this kind of general area. That demand needs to be held. Now, for the supply on the upside, right, we have to be able to close or break above this high of day supply right there. So everything in between, right, you might have to zoom in and get some scalps here or there. What are y'all typing 1 for? What the fuck are y'all typing 1? Okay, so anyway, this is what we have to watch for the indexes. Make sure you're watching VIX as well. Remember, if VIX is looking bullish, you know, then we should see some sense of a strong bearish trend. And if VIX is looking bearish, then we should see some relative strength on the indexes. So, yeah, I mean, if you're in the Patreon, if you're green today, put a 1 in the chat. If you're red, put a 2. What'd you say? Yeah, I'm doing a small account challenge. Yep, I started that with $1,000. I think, what am I up to today? I need to update it. I'm at 1465, so 46% or so. So yeah, I mean, you know, good work today, guys. For a choppy day, for those members in the Patreon, for us to delve through and understand price action very clearly, right? I was done about 1 o'clock or so. You guys killed it towards the end of the day. This is super tough price action. But what do I always tell you guys? This is where traders are made. If you can trade in some choppy kind of price action like this, and you know, I've been pushing you guys to not, you know, yes, don't force yourself to put yourself into a trade like that, but if you're more experienced, you can, right? Shorting the lower highs or buying the horizontal support right there, right? Something very clear like that. You guys are doing great. So I love seeing the progress, especially from the red names in the chat. I've been upgrading a lot of the green names, right? The newer members. I've seen a lot of potential and progress from you guys. So let's keep it up. Does the Patreon last a month exactly when you join? No, it charges on the first, right? I don't have any control over that. But this is the last week for the $60 price tag. So what do you got? 1, 2, 3, 4 days left. And then that's it, right? Because that's already a 2.5 week extension from. I was gonna start it on the first, but after that, that's it. So, Noonan. But yeah, thank you guys for tuning in. I hope that you learned something from this. I really hope. My whole goal for the Patreon and just these live streams is to push people to become independent and understand, where they are in their journey and what it's going to take to get to their goals and achieve those goals. So I've seen great progress from you. You guys are light years ahead of, traders that are having a hard time understanding the, how simplistic the market truly is. So once again, I will catch you guys in the morning. Make sure you get some rest, drink some water, please hydrate. And you guys take it easy, take care, and let's kill it tomorrow. Okay, we got 1 DTEs as well as a holiday on Monday. Markets are closed, so if you do have a cash account, leave a little bit of money on Friday so that you can trade on Tuesday. Okay, I'll remind you guys again tomorrow. So take it easy, be patient tomorrow, and I'll see you guys in the morning.